It's interesting that China and Russia are big acquirers of gold at the moment. Do you think that they've actually taken a forward position on this?
Well, I think they're looking ahead to a post-dollar world. And yes, I think they know they're going to need more gold reserves, and I think they're accumulating them now. They're not going to come out and say that because that might push the price of gold up. And if you're trying to buy as much gold as you can, you don't want the price to go up until you're finished buying, not while you're still in the process of buying it. So I think the Chinese and the Russians will quietly accumulate as much gold as other nations are dumb enough to sell, or other individuals or institutions who have it. But central banks are going to be big, big buyers of gold, I think, for many years to come.
And one question I have is that the price of gold is, drifting around 1800 or a bit below. It's sort of gone up, down a bit, but it really hasn't reacted so far. And I wonder whether this is to do with the relationship between the gold futures, which is what, 50 times the underlying. Do you think the futures market is actually influencing the spot price? And is that one reason why gold is where it is at the moment?
Well, look, I think gold is actually holding up quite well because remember, the Fed is tightening right now. Even though it's not raising rates, it's tightening monetary policy just in its rhetoric and in what it is preparing the markets to expect when it comes to the timetable for the taper, when the first rate hike happens. And so normally when the Fed is doing this, you would expect the price of gold to go down. The fact that it's holding up shows you that there's not a lot of downside risk in gold. And I think when gold really is going to start to move is either when the Fed finally starts to raise rates, and then gold could go up, or if they never get around to raising rates. If the Fed is forced to backtrack on its hawkish talk, I mean so-called hawkish, because there are no hawks, it's just degrees of dovishness. But at some point, the markets are going to change their view from we have inflation, but it's going to go away because the Fed's going to fight it, to we have inflation and it's going to get worse because the Fed's not going to fight it, or even if the Fed tries to fight it, the Fed will lose the fight. And that's when gold just is going to go ballistic. I think we're going to have a major move up in the price of gold to not only reflect all the inflation that we've had over the last year or two, but all the inflation that we're about to have over the next several years as the government doubles and triples down on these failed policies. Look, I think we're headed for a collapse in the bond market. Whether it's a nominal collapse or just a real collapse, I think is ultimately irrelevant to the fact that you're going to get wiped out if you're following Harry's advice and holding on to IOUs for US dollars issued by the United States government. I think that's one of the worst places that you could be. The problem with Harry is he's still stuck in the 1930s, and he thinks that we're going to have a 30s style deflation. That's not going to happen. We're not on a gold standard anymore. The gold standard is what prevented the government from doing in the 1930s what it's about to do now, and that is print even more money to keep stimulating the economy and keep running deficits. So it's massive inflation. It's maybe even hyperinflation that Harry should be concerned about, not deflation. The only way Harry is going to see deflation is going to be if he measures prices in gold. So I agree with Harry. Stock prices are going to go down. Real estate prices are going to go down. But they're only going to go down if you're measuring them in gold, right? So in terms of how much gold you need to buy the S&P 500, you'll be able to buy a lot more of the S&P with your gold in the future than you can buy today. But as far as dollars, who knows? You might not be able to buy any stocks with your dollars if the dollar is worthless. Gold's never going to be worthless. Stocks will be worth a lot less than they are now in terms of gold. When you're thinking about prices, it's difficult to think about prices in terms of dollars because the dollar itself is going to be losing value. So on a relative basis, stocks can go down, but the dollar can go down even more. And so it looks like stocks are going up. It's like, trying to measure somebody's height, but you don't know how many inches are going to be in a ruler. So I can be 6 feet tall with a ruler, but if the ruler has 10 inches in a foot, obviously I'm not getting taller just because the ruler is getting smaller. So people are going to be confused by the illusion that they're getting richer, even as they're actually getting poorer, if they just look at a dollar price on their assets. So I always want to look at assets in terms of gold. And during the bubble, assets have gone up in value relative to gold, but they're going to come collapsing down during the deflation. But poor Harry Dent, he's going to get wiped out even more by the deflation, because the price of dollars relative to gold will probably go down a lot more than the price of the stocks that he's not buying.
Now, last couple of questions. Inflation, if it's there, is really it's a tax. It's a hidden tax, isn't it?
Well, of course, because the source of inflation is government. That's why it's good to call it a tax, because it's the government that is imposing the inflation on the people, and it's doing it to fund its spending. So most people, when they think of taxes, it's, hey, the government takes my money, they levy a tax on me, and money goes from me to the government, and the government takes that money and they give it to somebody else to spend. And so I have less money to spend, and now somebody else is spending my money. Well, the government has another way of getting your money, and that's through your purchasing power. So instead of taking your money away from you, the government just prints up some money and then gives that money to somebody else. And now that somebody else has money to spend that they didn't earn, and now they go out and spend it. But because they didn't earn it, they didn't help produce goods and services. So what happens is the people that get that new money, they go and buy stuff, prices go up. And now because prices go up, you can't buy as much stuff as you could have before because you don't have more money, but everything costs more. So let's say prices go up by 10%. Well, that's like a tax. That would be exactly the same if the government took 10% of your money, so that now you had to reduce your consumption and you bought, 10% less stuff. When they take your purchasing power through inflation, you arrive at the same result. You buy less stuff, not because you have less money, but because the prices have gone up. But those higher prices are effectively a tax, which is why I was very critical of Joe Biden's promise that Americans under 400,000 of income wouldn't have to pay anything for all the spending. I said that was a lie. They were going to pay the inflation tax, because the inflation tax actually falls heaviest on the lower income and middle income people. The very people that Biden claimed would be exempt from his taxes are the ones getting hit the hardest from his taxes.
Yes, and conveniently, of course, inflation also devalues the absolute debt that governments have. So in a way, what they're doing is basically shrinking their problem, but creating a bigger problem for everybody else.
Yes, they're screwing all of their creditors, the holders of U.S. Treasuries, but it's not just U.S. Treasury holders. When they create inflation, they destroy the value of dollar bonds, all kinds, corporate bonds, muni bonds, all bonds lose value, not just those issued by the U.S. government.
But individual investors, right, watching what's going on at the moment and trying to figure out what to do, what's your perspective in terms of how investors should think about this?
Well, they should understand that inflation wipes out creditors and it wipes out paper wealth. But real wealth is not affected. If you own real things, tangible property, equities in businesses, real estate, those assets will retain value, because prices can go up when there's inflation. If you're a business and you're selling products, you raise the prices of those products. But if you own a bond and you're clipping a coupon, your coupon is stuck, and your principal is fixed in a certain quantity of money. And if inflation renders that quantity worthless, well, what you've got is worthless. But governments can print money, but they don't print stuff. So I want to own what the governments can't print: real businesses, productive assets, capital, plant, and equipment, real resources, minerals, energy resources, agriculture. There's a lot of things that you can own and business that you can own. But I also want to own gold, because gold is going to be remonetized in the aftermath of this currency crisis. And, the only way back to prosperity, that road goes through a gold standard. We're not going to get it relying on fiat currencies. When lesser fiat currencies failed, when you had like an Argentine peso collapse, okay, that's one thing. But the US dollar, the primary reserve currency, if the dollar can fail, well, then anything can fail. I mean, how are you supposed to have confidence in the euro when you see the dollar collapse? I mean, who's to say the euro won't be next, or the Japanese yen? So how is Europe and Japan going to say, hey, don't worry, what happened to the US dollar is not going to happen to us? Well, why would you think that? So you got to do something to change the dynamics. And okay, well, no, we're backed by gold now. We have gold reserves, and we're going to stop printing money. And that's how you can have confidence that what happened in America won't happen here.